You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That funky tune means it's time once again for TWIFO, This Week in Futures Options, the final program here on our broadcast week, bringing to you all of the hot action on the other side of the fence. So we're talking futures options, commodities, indices, ags, all that fun stuff. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If you guys are new to TWIFO, first off, welcome. Secondly, you have a whole other universe of shows to explore, 14 other to be precise. Easiest place to find all those, of course, the mothership, the flagship, theoptionsinsider.com. While you're there, click on some breaking news from the options market, some education, some analysis, all that good stuff we have up there on the website for you. If you just want to mainline the audio, we got that for you there too. Or, of course, you head over to your platform of choice. If you're already listening to this show, you may want to subscribe to the full network, the Options Insider Radio Network. That's the easiest way to get all 15 programs delivered directly to your device of choice whenever they are available, and they are available quite often. So be prepared when you hit that subscribe button. You're getting some content headed your way. Of course, you can always join us, as always, live every Monday and Thursday, 1:30 p.m. Central, 2:30 p.m. Eastern, via Mixlr, MIXLR. If you don't have that link, grab it now, bookmark it, follow us on the Mixlr platform. You'll know every time we go live for all of our shows. It's the same link every time, never changes, so don't worry about that. Just grab it once, and you're good to go. Of course, you can always hit us up, questions, comments, insights. We do love to hear from you guys. Believe it or not, we actually do. And joining me on the old program today, I'm glad to welcome back my co-host, my cohort, my partner in crime. He's been traveling all around the globe, but now he's back. Mr. Nick Howard, the founder of Bantix Technologies and the creator of a little platform we use once or twice around here called QuickStrike. Mr. Nick, welcome back. How was your globe trotting, sir?
Well, not much of a trot, just sort of a launch, land, and move around in one area. But it was a good trip, had some good business and some good pleasure. So, and I think you had a good show, too, while we were gone. So glad to be back and getting back in the seat again.
Yeah, Matt Bradbard did his ablest impression of you, sir, holding down the hot seat by himself all last week. So hats off to him. And now we have a new guest filling the CME Group hot seat this week. He is Ron Bundy, the CEO of Benchmarks for North America over there at FTSE Russell. Ron, welcome to the TWIFO program.
Thank you very much. Thank you very much, guys. Appreciate you having me on.
And Ron, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give us an overview, a little bit of your background in the space and how you found your way to becoming the CEO of Benchmarks over there at FTSE Russell.
Yeah, thanks a lot, Mark. I really appreciate it. It's great to be here with you guys and to be joining the listeners on today's program. I've been with FTSE Russell for about 18 years. FTSE Russell is a global index provider with some, very strong local market expertise. We'll probably talk a little bit about that, later in the program. But I've been there about 18 years, seen a lot of changes in that time in the index space. Over that period of time, we've seen, a significant increase in passive investing. And for investors, that means, creating better tools in the futures and options space, what this program is all about, and really giving investors the tools that they need to manage against our FTSE Russell benchmarks.
18 years. Wow. So you've really seen quite a few evolutions of the company over there, quite a few ownership structures over there. It's been quite the saga you've had over there at Russell.
Some twists and turns, we're right now with FTSE Russell. Our parent is London Stock Exchange Group. So they've been a strong parent. They, are right in this space with us. We've also seen, a lot of twists and turns in the market. We've seen, a lot of changes, a lot of ups and downs. And, the products, the ecosystem we have around these indexes, really help investors in virtually every market environment.
And Ron, I'm not sure if you heard it, but a couple of weeks ago we had Tim McCourt from CME Group on kind of giving us the CME perspective on why they decided to do this now, to kind of bring Russell 2000 back into the fold and really relaunch this product and bring it out to a new set of eyes, a new set of users. I'd be curious to get your perspective, the FTSE Russell perspective, on why you guys decided to do this, why bring it back to CME and the Globex platform, and what are you guys thinking about here for the future?
Well, we're very excited to be partnering with CME again on the Russell 2000. We launched the Russell 2000 futures contract originally on CME almost 20 years ago, and it's great to be bringing it back home there. We had a lot of great feedback from our clients who are looking for, the best risk management tools around the futures and options products. And for FTSE Russell, as we look to make sure that we always have the best tools for our investors, it's really important to have a strong ecosystem around products like the Russell 2000. So having the futures and the options on futures contract trading on CME is a great complement to the rest of the ecosystem around the Russell 2000. It's got a very liquid, very big ETF. The IWM on iShares is one of the most liquid ETFs on that platform. It's got a great cash options product at CBOE, and now bringing the futures product back to CME is an exciting opportunity for us to work with CME again, and also really listening to the market and where our clients, want to trade, we had a lot of great feedback that bringing the Russell 2000 back to CME was going to be great for investors. And so we're excited to be part of this.
Now, I asked Tim this, and I'd like to get your thoughts on this as well, because you brought it back pretty much in the mini format only. You think that's really a concession to the times these days? That's what people really want? Even the large institutions these days really seem to want, I think we can call it a more nuanced contract size, where even though it's smaller, they have to do more of them. It allows them to shape and structure their trades in more ways than, quite frankly, a much larger contract. Was that the plan after hearing feedback from your clients and customers, that they pretty much just want the mini? And is that the plan for the time being, to stay with the mini only?
Yeah, absolutely. So for right now, we listen to the market. The market is very accustomed to trading the E-mini. And overwhelmingly, that's where clients wanted us to start. But look, this is an evolving space. We always listen to clients. We're happy to make adjustments as we go forward. So, who knows what other types of products, will come out in the future. But for right now, we're very focused on the launch of this Russell E-mini 2000 contract.
And of course, you took the extra step, which interests us here on the show, and that's the reason you're on the show today. You didn't just launch the futures, which we always see. People usually lead with the underlying, and then eventually weeks, months, sometimes years down the road, they add the options on. You guys made it a full suite to begin with. Walk us through the thought process there. We're certainly glad you did it, because it allows us to talk about it on the show. But what was your thought process in launching both products? Did you feel, there was enough FTSE Russell awareness already? You didn't have to build interest in the underlying. You could kind of hit the ground running with both. Was that the thought process there?
That's exactly right. And so if you think about the evolution of this product, the Russell 2000 futures contract has been out in the market in various for about 20 years now. And remember, CME has a lot of experience with the Russell, and including the options products. And so when we took a look at what we wanted to do with this product on the CME platform, we stepped back. We really took a look at the options, listened to investors. And I really appreciate how CME has gotten behind this product. They took a holistic view of what's needed to make this a successful product in the marketplace, what investors are looking for, and decided to bring out the full suite of products around the 2000. And they have a lot of insight and expertise in that segment of the market. So we're excited to have that part of the launch.
And of course, listeners, you guys, as always, can follow along with the show. I mentioned the Mixler, but you can also follow along with the reports we're about to get into. CMEgroup.com/TWIFO. This week in futures options, it gives you free access to all those reports that we're using right now. So you too can see what the hot products are, what the hot strikes and months are, and different names, and all sorts of fun stuff. Speaking of Quick Strike, Mr. Nick, I know you have had some time to look at Russell. What are your thoughts on Russell coming back now onto the platform, and what you're seeing out there so far?
Well, it's only been a couple of weeks that you get to watch, but I learned a few things, and Ron could correct me if I'm wrong. What I didn't realize is that there was a Russell 3000, which is encompassed of the Russell 1000 and then the 2000. So the 1000 is the large cap, and then there's the 2000, which is the extent of the smaller cap stuff. So I was just looking at the whole list of indexes that were available, but I thought, at least for me, that was a little bit of an education that I didn't have before, because I always was generally thought of it only as the Russell 2000, which was just the small cap market. But as far as, I think the index had the benefit of being out there somewhere else, having options trade on it already. If it was a new product, we probably would have followed the same paradigm that we had seen in the past, where the underlying comes out and then the options follow. But it makes a lot of sense to get it out there all at once, especially given. And I think the best thing that the exchange did was not just release the quarterlies, but also do the end of months and the weeklies as well, because the success in the indexes that the exchange already has in the S&P and in the NASDAQ, it's pretty significant volume is in the weekly. So I would expect, and I'm looking at some of the numbers now here, and again, we'll reiterate to people that the weeklies. They put weeklies out there for
just the regular weeklies, like as people think of them, just sort of filling the gap between what's going on now and the first quarter of expiration. But they also have the weeklies out there for what would used to be called the serial options, right? But if you go look at open interest on the Russell so far, a majority is already taking place on the weekly. So that was the right decision. And although, I'm looking at now, it's almost 100% increase in open interest from last week. So a good idea. And I think, like Ron said, the fact that there is sort of a concerted move towards the passive investment, this is going to give people a lot of opportunity to hedge it more easily and have a little bit more granularity in the hedge, especially with the short-dated options.
And Ron, what are your thoughts? Like Nick said, it's only been a few weeks, but it seems like the volume is actually picking up out there, particularly from an options perspective. We're seeing, a few thousand contracts open out there, open interest getting pretty strong out there again this week, as you might expect, starting from a small number, but growing, almost doubling this week. What are your thoughts on the first few weeks, particularly from an options perspective? Are you seeing the numbers you like? And then what are the feedback you're getting from the clients? Are they excited to see it back, and are they looking to dive in soon?
We're very excited about what we're seeing in the marketplace around the launch of the Russell 2000. To go back to Nick's earlier point, he's absolutely right. The Russell 3000 is really the foundation of our U.S. franchise. At FTSE Russell, there's almost $13 trillion benchmarked to our index families. The Russell 3000 is the cornerstone or the foundation for the U.S. We have the FTSE 100 in the U.K., we're very strong with our China A50 product in Asia. And so we have an entire ecosystem around our indexes. The Russell 2000 is the product that most traders are familiar with because it's one of the most traded derivatives products on the equity side. But there's a whole family of Russell indexes totaling almost 13 trillion in assets that follow them. But specific to what we're seeing over the last couple of weeks, Mark, and to your question on are we excited about the product, we're very excited. In week one, we traded, CME, had just over 23,000 trades on the Russell 2000 futures product. And yesterday alone, we saw over 23,000 contracts trade. So we're seeing a lot of momentum. We're seeing excitement in the marketplace, clients wanting to, come back in on the Russell 2000. Nearly a quarter, or roughly a quarter of the volume that we're seeing on the futures product in the early days are coming from European traders, with over 650 unique accounts so far, trading on the Russell futures product. So it's really exciting. The market response in the early days has been very positive, and it's been a lot of fun since July 10th, since we've launched.
I'm sure your team has been quite busy over there, maybe looking forward to a little vacation here in late July or early August. But, before the show, we asked our audience, Ron and Nick, we said, hey, VIX is kind of circling the drain these days. So where else are you looking to get your volatility fix these days? And the early votes are coming, and this will be up for the rest of the weekend, pretty much, listeners. So if you haven't caught it, you're listening to the on-demand version, you still have time to vote. But if you're listening live, you can get in there now. We gave you 4 choices. We said, you're looking at some NASDAQ vol? Are you looking at Russell 2000, small cap vol? You're looking at commodities, so your oil, your gold, et cetera? Are you looking at maybe some single name equities, your Amazons and what have you? Nick, no cheating now. What do you think is winning our poll so far here in the early voting? Mr. Nick, this is where you hit your button, sir.
Yeah, I know. I'm trying to be expand all my windows so I can answer more appropriately.
No cheating. No looking at the answers.
I'm not cheating. I'm not cheating. I'm looking at I got to see what I thought. I thought I didn't agree with some of the.
I can read you the choices again.
I'm looking at them right now. I don't know. I'm going to say I just because the 2000's too new, so I'm not going to vote there. Not to you should vote there just for the topic of the show, but I'm going to guess none of them are good choices to me. I'll go with the NASDAQ because oil and gold I don't see too much there. In the Russell, I think just if I'm looking at both places it's trading and I still don't think not yet. But I'll go with the NASDAQ.
All right, Ron, same question for you. What do you think is winning our listener poll here in the early voting? You think it's NASDAQ, You have a vested interest in Russell, so maybe you want to go that way, or maybe you want to vote commodities, or you want to vote single name equities like your Teslas and Amazons. What do you think our audience is gravitating to now that at least S&P 500 vol for the time being is somewhat anemic?
Well, I've got to go with the Russell 2000 vol, Mark, of course.
You're shocking me. You're surprising me, sir. I never thought in a million years you'd go that way.
Exactly. Well, there's good reason behind it, right? As Nick said earlier, the Russell 2000 is a small cap segment of the U.S. economy. It tends to be a little bit more volatile in given market cycles. Those smaller companies are really the movers and the shakers. So you see a lot of movement, a lot of M&A activity. And with the current administration, since Election Day, right after Election Day here, the small company stocks, really took off. And so I think in this environment, I'm going to give the nod to the Russell 2000.
Well, there is something to it, even though you are playing for the home team there, but I'll allow it because there is something to that. And one of the notions I know when Russell first launched RVX back in the day and others, one of the reasons a lot of people were excited about that was that structurally small caps should be more volatile than large caps. It's just a place to go for a little bit more volatility. So who knows, in this low volatility environment, perhaps that is the place. Right now, our listeners, I think, surprise, they're probably a little bit colored by the earnings that came out last night, but they're leaning towards the NASDAQ. They're going for the NASDAQ with about 38%. Russell holding in there, 31% saying Russell 2000, 19%, only 19% coming for the commodities. So oil and gold, not jazzing them up there, Mr. Nick, and only 12% only saying single names like Amazon and Tesla and stuff. So I'm surprised with those results. Again, this is early voting. You still got a few more days if you haven't made your voice heard. But fascinating stuff. Mr. Nick, let's get into it. Before we move off of Russell, obviously we said it's kind of early week, but it has been an interesting one to watch. Of course, the index kind of net selling off on the week about 0.5% or so. So that, of course, driving a little interest, maybe a little action, a little bit of volatility. Anything catching your eye out there this week, Mr. Nick, from it could be an options action perspective, could be a skew perspective, or maybe just overall thoughts on what we're seeing here from, again, just these first couple of weeks here from the early days of the Russell 2000.
Well, I'll go back to I think when we spoke just before the launch, we were curious to see whether the skew, the vol curve skew, would start to pick up like the other indexes, right, and see if it would take the same shape. And it appears that generally it is about looking maybe not quite as steep, but it's still very similarly steep to the E-mini S&P 500. So that was the one thing I was really trying to take a look at. There's still a lot more. The calls are still much cheaper in the S&Ps, and the puts are still much richer in them. And the Russell's not quite there. And again, for the audience who is looking, or if you're following along later on, I'm just looking at the quick skew column, and I could see right away how rich or cheap the calls and puts are at the money. And the calls are offered and the puts are bid, but we don't see the quite percentage difference that we're seeing in the S&P. So that was one thing that we saw the calls get, I think generally saw the calls get cheaper and the puts get more expensive, but we're not quite seeing the slope in that difference like we are in the S&P. So, and again, that could be because, as Ron mentioned, that the small cap stuff is generally more volatile, which means you're going to get more movement in both directions. So still with some downside bias like we expect in the indexes from a hedging perspective and stuff like that, but maybe there's still a little bit more balance based on the fact that we can see some up and down given the nature of the index makeup. As far as anything else, for me, I'm just, as we look at the TWIFO report, I'm just going to continue to look at, we're going to, the numbers are small still because we haven't had a whole lot of time to trade, but I've been watching it on CME Direct as well. The markets are tight. The size on the sides of the markets aren't that big yet, but there is size on both sides of the market. But tight markets with size, you're going to get trade. That's just the way it happens. People are going to go where that action is. And for me, the positive, as always, is, whenever you can see almost 100% increase in open interest, I don't care if it's from 10 to 20 or 1,300 to 2,600, like we're seeing this week. We have a nice increase in open interest, and like I mentioned earlier, it's good to see those short dated or those interim weekly options. That's where the action seems to be at this point right now. And, as far as anything else catching my attention, still put bias, right? Put call ratio is above 1. So there's still a bias on the downside. But I think if this index starts to act like its makeup, then we might see a little bit of a divergence from how the index is acting to how this vol curve looks and what the put call ratio comes out to be and how our quick skew looks. So that's it for me from this point after a couple weeks.
Not going to say this for the futures options feedback. You kind of just touched on it, so we'll do this one now as well. This is a question from J Randall. All listener questions seeping into the front part of the show today. What's going on? J Randall wants to know, hey, S&P skew is pretty standard at this point. How do the other major indices like NASDAQ and Russell compare? Steeper? Are the puts as rich? Well, you just pretty much answered that question, Nick. It sounds like Russell is not lining up quite as steep right now, so the puts are not as expensive. The call is not quite as cheap as the old S&P. Is that pretty much your take, sir?
Yeah, I mean, I'm purely going off what the numerics say, so that is the case. It's a little bit flatter. You're still seeing the rich and cheapness, but it's definitely a little bit flatter. I'm looking at the NASDAQ now. The NASDAQ is a little bit more in line with S&P, but again, maybe it's sort of this movement from one extreme to the other. S&P is very steep. The NASDAQ's a little less steep than that, and the Russell's a little less steep than the NASDAQ. So maybe it's a function of the possible movement in both directions, or where maybe the fear on the S&P is always on the downside in the coverage standpoint of the bigger portfolios. But yeah, I mean, they kind of, it's almost like the three bears, right? There's the Papa Bear, the Mama Bear, and the Baby Bear, and that's sort of what the skew looks like right now. I don't know which one's just right just yet, but that's what it looks like.
I was going to say, which one is just right in that scenario? I guess that's a subjective thing. It's up to each of their own. But Ron, I'd be curious to get your thoughts on this as well. Obviously, you've been over there in the Russell land for 18 years, so you have some perspective on these products. You probably have watched the evolution of these products and how they trade for quite some time. What are your thoughts on our listener question, and just in general, the nature of this volatility skew in a product like Russell? Is this a typical scenario? Do you usually see the puts are a little bit cheaper from a vol premium perspective, the calls maybe a little bit richer? Is that a usual scenario? And if so, what do you attribute that to? Is it because there are a lot of big funds, like Nick alluded to, driving a lot of hedging activity in the S&P, so that drives up the puts, crushes the calls? Or is there something else at work? So have at it, sir. A lot to unpack there.
Well, I think Nick's in a better position to answer that question. I think he did a good job, but overall, every time I try to predict the market in this space, I get it wrong. So I tend to more talk about the index and what's going on, with that. And certainly the volatility curve on the Russell 2000 options is always interesting. Given it's a more volatile basket of stocks in general, the small cap U.S. stocks. And it's given that small cap exposure, I think is really adds to the longer term to just slightly higher volatility in the product. And from a trader's perspective, I think Nick said it right. It's really up to the sentiment of individual investors on which of those products are going to be just right for them.
Yeah, it'd be interesting to see as Russell gets out there more now that it's relisted and reborn effectively over there on Globex, as this starts to get out there, as more large funds and even a lot of retail start flocking in. Certainly, as we saw from the voting in our early voting in our poll, they are interested in this product. So as more of them start to flock to that, if we start seeing the skews perhaps starting to line up a little bit more, that'll be interesting to watch, just because the use cases out there for the S&P, people know what to expect from it. They know what to expect from a volatility skew perspective. They know when it starts getting top heavy, the put's going to get rich, the call's going to get cheap. That's kind of just a standard pattern, as J Randall pointed out. NASDAQ a little bit more, not Wild West quite for it, but a little bit more, has a little bit more room to move out there. And so it'd be kind of interesting to see if that starts lining up, or if perhaps, not NASDAQ, Russell, if Russell starts really developing kind of its own shape and its own performance characteristics as it starts to get a little bit more traction on the options. That'll be the real interesting story to watch, Nick, and one we'll probably have to come back to quite a bit here on the show. I do want to get into crude, obviously, as well, because that was a hot product in a lot of people's minds. But before we do that, Ron, maybe any thoughts here, any last thoughts you want to leave us with on the Russell before we segue into the Texas tea, sir?
Yeah. I mean, I think the skew is really interesting. But if you look at the other opportunities investors have on the 2000, we've been, talking about the S&P, talking about the NASDAQ. The CME platform is a really powerful, risk management tool, because now we can have margin offsets on the Russell 2000 of what, 75%, roughly against the S&P 500, 70% against the Dow and NASDAQ. So those can change over time, but that really adds to the attractiveness of looking at the Russell and how investors might, use that in their trades. So there's a lot happening. It's the early days bringing it over, but we continue to be very excited.
Nick, last thoughts there on the Russell before we dive into all things crude, sir?
Yeah, no, I just really wanted to make a comment about the bid-ask spread on it. So I'm looking at the straight up SEP contract, and it's about 20 cents wide. So, it like I said earlier, I think the market's there and they're tight. It's just a matter of getting the size right and getting more participants and people more comfortable, and that will come. And I think if you start with tight markets, the size will come because people will want to trade, given the fact that they aren't paying such a dear price to get in and out.
Yeah, that's certainly one to watch as we segue over here. I know a lot of you guys had crude on the brain this week as well, and it's hard not to see why it's been just an explosion in all things WTI this week. In fact, if you break down, listeners, if you can hit the scanning tab over there on Quick Strike, you can do it for yourself. You can see over the past week, WTI actually the best performing underlying out there in the whole universe of CME products, up about 8.5%. The big loser of the week, actually, live cattle. For all of you out there playing along on the home game, down about 4.5%. Everything else falling there in the spectrum in between. But it's been an active week for crude. Like I said, ending the week up about 8.5%. Flirting with and breaking that 50 handle, that much watched 50 handle. How long we've been talking about that now? Will it get back up there? Will it hit the 50 handle? Well, this week, at least, the answer was yes. And so a lot of you out there who've been writing in, asking when the crude bullish scenario will come back, when can crude rally? You had your week here, so you were pretty happy, hitting over 8-week highs again as it broke into, that was in the 49 handle. 50 handle probably is a little bit longer even than that. And again, a lot of that rally driven by the big concern, of course, out there has been the U.S. supply glut, and when will that drop? Well, it seems like that's finally starting to happen. We saw a bit of a drop out there in U.S. crude stockpiles, as well as the Saudis talking up their plans to cut their exports. That combo, that 1-2 punch, seemed to really buoy the market this week. Also saw U.S. drillers announcing some production cuts ahead of those weak prices. That may change now that the prices are back up, hence the push and pull, the tug of war that is the market. But c'est la vie, at least for this week, we are back in that 50 handle. Vol, kind of a mixed bag. I'll let Mr. Nick dive into that in a minute when we get into the skew. But of course, the fascinating thing, I think you guys can probably guess what the number one with the bullet was again, almost 50%, about 48% of the volume again coming in that SEP contract. And the number one with the bullet, yes, you guessed it, the 50 strike, the 50 handle out there. It's been lighting it up even when we weren't flirting with the 50 handle. Now that we hit it, now the 50 handle was lighting it up yet again. About 42,000 almost contracts lighting it up. About 9,000 and change to actually most of the week, 9,000 and change with a little bit less on Thursday and Friday. So very active week out there for the 50s. Actually slightly closing net on the week, about 10% off closing. So again, a lot of back and forth, a lot of volume as you're going to expect, and a lot of, like I said, back and forth trading. You're going to expect that on that 50 strike. The crude complex, they just love these round handles, these round numbers, the 50s, the 40s, the 45s. That's where they really like to get in. And this week was no exception. Number two out there may surprise some people, though. It was the 45 puts. So getting back to that kind of tight risk reversal, that tight strangle out there, the 50-45 risk reversal coming in. Number two, the 45 puts, 28,000 contracts and change, including about 10,000 lighting it up on Wednesday alone. That was the lion's share of the day, about a third of the volume coming up on Wednesday. And again, slightly closing on that activity as well. So a lot of back and forth on both of those strikes. And then we fall off again, probably to the 46 puts. So a little bit tighter put there coming in number three, 19,000 and change over there. So less than half of the 50 calls there for the number 3 spot. Shows just how active of those 50 calls really were this week. And a lot of opening action on the 46 puts, about 5,000 and change of that 19,000 a net opening. The biggest day coming on Wednesday again, about 7,600 contracts and change out there. Of course, the 50 handle wasn't only active out there in the front month contract. It was also active in October, about 11,000 of those, 13,000, I should say, going up in October. We saw the doubles, the 55s, active in December. They're about 11,000 and change of the 55s going up there. 50 handle also active out there in June of next year, June 2018, about 6,000 of the 50 calls also lighting it up out there. So 50 was kind of just the trade du jour. And if you want to go really far out and see what people were playing with this week, then the big trade were the 60 calls. So a little bit more optimistic. That's out there in Dece of 2019. 1,000 lot of those trading on Tuesday of this week. Also, not to be outdone, the 50 is also trading, but a little bit less. 950 of those all the way out in Dece 2019. So kind of pick your poison. The 50 calls were where the action was this week. Nick, a lot going on in crude this week. Seemed like forever, this dance of will we get back to the 50 handle? Well, we did it this week. What do we see out there in the vol? What do we see out there in the quick skew this week in this upside action in crude, sir?
Well, I'm going to pulling up something else. We could take a look. One thing I want to mention before we jump too far in this, and so for Ron's benefit as well, is all the stuff that we're talking about that Mark's able to see so quickly. That's all available in This Week in Options for all the products on the CME group. So where what Mark's doing is he's clicking on the most active columns link that's live right now during the show, and that lets him see not just the top one on the call or the put, which happens to be the leader for that contract, but also the top 10. So that's something to keep in mind, and an impetus to really watch or listen, I should say, and follow along during the show so you can get the benefit of those live links that we only turn on for that hour. Otherwise, you have to subscribe to get the more detail of the report. But, it's one of those things again, right, where we're right back where we started. It's like we were gone around the block. This time it was a little bit longer block, but we went around the block and we're back at the 50 strike. And if we start to, I'm going to bring up a summary report I'm running in the background here, but if we just look in September, which is 20 days to expiration, our largest open interest strike from it being a call, because it's still technically out of the money on the September side, is the 50 strike. So again, we've said for a lot of weeks that we're going to see a trading range between 40 and 50, and sometimes we talked about 45 to 55. We've been seeing 45 to 55 for the last 4, 5, or 6 weeks. Maybe we dipped a little bit below the 45, but I think right now, based on what I'm seeing, and once I get the summary report up, I will comment on that. 50 is going to be our barrier right now. So we're going to bounce around there. You mentioned that there was more closing than there was opening in that. It was closing in that strike. So that means some people trading out of it, right? People that were holding on to it and finally got a chance to maybe get some bang for the buck that they've been holding on to, or they got in cheap a little bit earlier. But, again, I think we're gonna be rangy until we get through the 50, and we have to get through the 50 significantly, I think. But I think there's going to be a lot of action there, a lot of churning before we get much higher. And above the 50, at least in this September, there's 52 strike and 55 strike, which have a little bit bigger open interest numbers against them. But I just feel like until something significant happens from a supply standpoint or from a production cut standpoint, that we're still going to bounce around between 40 and 50, and more than likely between 45 and 50. As far as vol goes, generally offered across the board, up in the front 2 contracts, not much, insignificant amount as far as I'm concerned in the second month of October, and about 0.75% in the September. But I'll even write that off because it's inside of 30 days. I don't even think that much vol movement up as being anything over the course of the week. So pretty steady, kind of like we said, Mark, moving into old territory. You move into old territory, you start to see the volatility come in, especially as you go out on the vol term structure. You're seeing it get hammered quite a bit. And part of that is moving along the vol curve, right? You're going from higher volatility put strikes to lower volatility call strikes. So a lot of that might not even be, that's just moving along the volatility curve, and that would be something interesting. I'll try to tweet a picture of last week versus this week to see if we actually had an absolute move or if it's just sort of moving along the vol curve path. As far as quick skew, which is going to measure the Richard cheapness of the put and call in relation to that, the money, not really much of a change. Or, well, some, further dated, you saw the puts get a little bit richer and the calls get a little bit cheaper. Near term, like inside of 3 or 4 months, you didn't see much of a change over the week. So not anything really significant there. But I guess it kind of is significant, the fact that the longer dated stuff got a little bit more expensive on the downside. So maybe people don't think this move up is so long lived. In any case, other than that, you did a good job of covering the hot strikes. I think sort of the interesting one for me is the December of 2017 55 strike. So you saw a little bit more open speculation. I think that's going to be your typical, maybe people closing the 50s and moving up to the 55s. And I think you saw that. It's like almost 2 to 1 in terms of the doubles in that contract. To the halves. So maybe a little bit rolling up, maybe some 1x2s taking place to roll up to take advantage of maybe a continued move up. But, nothing too fascinating from a volatility standpoint. Like you mentioned, we're up almost 9%. Again, the open interest up again, 4% across the board. So movement in the markets, volatility, I don't think the move did volatility any favors, but I think it's just, again, kind of moving within the range. And until we see something significant, we're probably going to have to wait and see what happens. I'm going to take a real quick look at the 90-day volatility over a period of time. And yeah, so, kind of the same old story. Till we get, like we said before, till we get through the 50, probably not going to see much volatility in any of the contracts. You mentioned we got through the 50, but that's in the further dated stuff. But in the stuff that's trading more liquidly, we haven't gotten through it. Until we get through it, and with a pretty significant percentage move through that, probably going to see vol kind of hang around here. And I'll go back to what I think it was it who was on before the EIA report? Was that Matt that was on, that he said that his customers didn't think that was crude
Matt.
Would get pet?
Yeah,
that was Matt,
he
right?
Was kind of. I think he was pretty tight. He was in like that 40 to 50, maybe 45 to 50 range. Yeah.
Yeah, no, he said he I think he conjectured that it wouldn't get past 52.5, and it never got past 52.5, and then went down to 44. So, 52.5 is going to be 5% increase over the 50 strike. So until we get a 5 to 10% move above 50, I don't think we're going to see much in terms of volatility.
All right, what we will see a lot of, actually, though, are your questions. So let's dive right into it. Time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody. Welcome to the Futures Options Feedback. Like the man said, this is your portion of the show where you guys take the reins, even though some of you managed to sneak your questions in to the top of the show. That's cheating, but I guess I allowed it this week, so it's all right. Speaking of an update here, Ron, we're getting some updates here on the old poll here. Looks like NASDAQ still at about 38. Russell coming up 31% now, saying they want to get themselves their Russell 2000 volatility fix. So there you go, Ron. A lot of lovers still for the volatility out there of Russell. Maybe that'll buoy your team going forward. Might be an interesting way to present the product going forward as well. Everyone seems like there's endless complaints about the lack of volatility in the S&P. Russell vol obviously low as well, but still structurally it's probably going to be a little bit higher than S&P. So are you seeing, just anecdotally, are you hearing from your clients, is that a driving force for getting them interested in the product? They know they're going to get at least a little bit of a premium there?
Yeah, absolutely. So investors have a lot of experience with small cap stocks, specifically, through the Russell 2000. And as you noted, Mark, in many market cycles, the small cap stocks tend to be a little bit more volatile. And I think investors are looking for that right now. We're not seeing a lot of volatility overall in the markets, but small caps in general are very interesting from a vol standpoint.
Yeah, and of course, Nick, we have our people chiming in with their own thoughts. Guess what people are suggesting, including, guess what product, Nick, they're suggesting for their volatility, including J Moves. I can't read that handle. What do you think they're all suggesting as an alternative for our poll, Nick? Take a guess, wild guess. What have they been writing into us with for weeks now? What they want to talk about? I'll fill in for you. It's Bitcoin, sir. Bitcoin is what they're all writing in, saying that's where they're going for their volatility. I wish you had a nice listed product that you could trade Bitcoin options and futures and underlying on. Unfortunately, not getting a lot of love for that one out there. Mr. Nick, you just talked about this one, so this kind of is a good one for you then. This comes from NNO2. They want to know, hey, is crude still lining up for bullish risk reversals here, or has that ship sailed? You recall, Nick, we talked quite a bit leading up to this, into this recent rally. Back a few months, it's probably been really since it really looked favorable, but there was that nice, really rich, juicy, it was almost like an index. It was very juicy premium to the WTI out of the money puts, and the calls were fairly cheap. So it looks nice for bullish risk reversals. In recent months, that premium not quite as juicy in the puts, and also the calls, near-term calls got bid up. So it didn't look as favorable. Fast forward to now, we just saw obviously a nice spike in the underlying, up 8.5% this week. So I'm gonna go out on a limb and guess that the calls are a little bit juicier up there right now, at least in the near term. But what are your thoughts looking at the quick skew for bullish? He wants to know about bullish risk reversals here in WTI. Is this favorable now? Mr. Nick, sir, can you hear me?
Sorry. I start talking. I did guess Bitcoin, by the way. And,
sure you did. Sure you did.
And I was muted, so it's not fair. Let me look at. I think. Like we said, I don't. I mean, the calls are. Let me see here what I think. Just to make sure that I'm comfortable with it. I don't. The calls are cheap and the puts are expensive. Is it as narrow as, or is it as wide as it's been in the past? If I'm just looking at like the November contract, it's been much more narrow. If I go out and look at the constant maturity and take a look and see what we have from that standpoint. Let's see what we got here. My quick chart and get my expiration up here. If I look at the 30-day on the crude and see what I think here, I mean, I don't think there's anything interesting right now with that, to be honest with you. It did line up to be much better, and I'm looking at the 30-day and the 60-day, and there's nothing really that stands out to me. It's sort of kind of in a tighter channel, and the beginning of June we had some good opportunity, and then again probably a little bit better opportunity about 2 or 3 weeks ago, but nothing right now that looks really sort of interesting or eye-opening.
Yeah, I pretty much concur. It's not really it was much more favorable for that looking back a few months. Right now, not so much. Certainly not on the heels of this big spike north. That's not when you want to, unless you really are, you really want to get bullish. you can't wait a little bit or take a different approach. Bullish risk reversals, maybe not so much. Maybe we need to have like a risk reversal or collar guide here, Nick, because people seem to be writing in a lot asking about collars and or risk reversals on different products a lot. Maybe that could be a new thing. How's the collar looking here? We'll have like a collar index, something like that. I'm giving you and your team always more work over there. I'm sure they love me over there. I'll mute you before your team gets mad at me over there with more suggestions. But I don't know. You like that tool? You like that idea, Nick?
We have a report. I'll tweet it out. It's not in production yet, but I'll show you. It is basically a 30-day quick skew report, which shows you what it looks like right now, and then the averages over the course of 1 week, 1 month, 2 month, 3 month, 6 month, 9 month, and 12 month, and it's for all the benchmarks. So I'm tweeting it right now. So I think they'll find that pretty interesting. So yeah, we have it. It's just not quite ready for prime time yet.
There you go, listener. See, ask and you shall receive, or perhaps someday soon you shall receive as it gets ready for prime time over there. But they got all this stuff for you. They just have to just get it out for you guys to sink your teeth into. Nick, you remember a few weeks ago, and Ron, I'm not sure if you heard, but we had an episode probably about maybe a month ago now, where someone wrote in asking us what the craziest product listed on the CME tire Globex system is. And so we really dug deep into a lot of different esoteric product categories. I've had a lot of guests cast their vote as well. Even had Tim from CME and others cast their vote. We got a lot of vote for the dairy and fluid milk kind of stuff out there. I don't know, Ron. I don't know if you have a deep grasp of the esoteric side of the CME product listing, but we have TIMD writing in here saying my crazy product vote is crude because crude was crazy this week. I understand where you're coming from. I don't know, Ron, if you have any thoughts there. You come across a product in all your time working with CME, you say, they list this? They trade this? Anything come to mind there for you, sir?
Well, I have not gone into the depths of of all the CME products, but for me, between dairy and crude, I'd have to go with dairy.
Yeah, I'm with you on that one. Crude is acting crazy this week, but in terms of weirdness of the underlying, I think Tim even went for some of the dairy. Matt had some interesting suggestions last week about some products he's seen out there that are kind of crazy. I don't know, Nick, have you evolved your vote, or are you still like with me in there and like the fluid class 3 milk and dry whey and all that stuff?
Well, it's still sort of the oddball one, but now that one thing we mentioned, we built this product browser for CME, and now that I am going out there and looking at all the different products, there's some crazy weather stuff as well that trades. So, I don't know if I'm going to change my vote, but there's stuff that talks about, I don't even know. I mean, it's crazy. Seasonal strip, monthly humidity futures. It's crazy. So there's some goofy weather stuff out there. So maybe when that, and they have some activity. So maybe the weather options are a little bit wacky as well.
As I recall, Matt chimed in on the defense of some of like the class 2 and class 3 milk, saying that actually can trade sometimes. He had some clients do some of that, so he think probably was more on the whey side as well. So maybe we'll stay with that. But yeah, some of the weather ones, and they're adding more all the time, so I'm sure they'll add some more. The answer for this question almost changes by the week, and people clearly have their own thoughts on that. Maybe someone right in with Bitcoin, you can certainly put it in there, even though it isn't on the on any platform yet to speak of. But maybe someday soon it will be, and certainly when it does list, it'll be crazy. Right now, Tim is saying it's crude, and it's hard to argue with him this week. All right, last up here, we got the creatively named Andrew. Nick, this one looks like it's for you. He says, how long are the reports live during the show? I'm assuming he's referring to what we mentioned over there, cmegroup.com/TWIFO, where you can go and click on it and choose whatever product you want. You can click on Russell, you can click on crude, you can click on fluid milk if you're interested, and get all the latest updates on there. I'm assuming, Nick, he wants to know, because those reports are active 24/7, 365. I'm assuming he wants to know how long are the links you can click on live right now. Like they can go get them right now during the show because they're live. They can follow along with us. They could click on that 50 calls, let's say, in the front month in WTI and see the whole spectrum. How long is that stuff live over there after the show?
Typically, I keep them on from the start of the show, 1:30 to 2:30. But today, since I'm not going to be out of here right after the show, I'll keep them on until 3:30. How about that? So we'll go an extra hour today, so you can knock around, and that'll get you access to the historical volatilities, the historical quick skew, nice open interest tools, the most active drop downs, as well as the top 10 volume and distribution across the week by strike report as well. So we'll let it roll till 3:30 today.
There you go, listeners. Ask and you shall receive. Look at that. You get a whole extra hour. So you get essentially access to all that cool premium quick strike stuff that we're always talking about on the show. Just click on that link and you too can see exactly what we're talking about. So you want to see those 50 calls in the front month in crude, or you want to dive into what's slinging out there in Russell or your product of choice, click on the link and you too can do a nice little carrot for all of you out there who get to tune in live. I know a lot of you are listening this week. You get to click those links, cmegroup.com/TWIFO. You get an extra hour. Go do it right now. Don't leave the chat yet, but you can go do it in a separate browser tab, and you too can listen. Of course, that music means we've come to the end of another epic journey through the world of futures options. What a journey it was. We talked Russell, we talked crude, we talked index skew, we talked collars, crazy products, all that fun stuff. That said, Ron, you were a great guest in the CME Group hot seat this week. So before we go, I want to give you a chance. I know you and your team over there at FTSE Russell are really working on a lot of cool stuff. If you want to leave our audience with maybe any hints, any teases of what they can expect from you and your team in the coming months in terms of new and interesting products or maybe some updates to the Russell offering, now is the time, sir. The floor is yours.
Well, thank you very much, Mark. It's been a lot of fun to be with you guys today, with you and Nick, and with the listeners. The one thing I'll lead you with is you look at the index space. You know, FTSE Russell is already one of the largest global providers with the local market expertise, like we talked about. But I think what you're going to start to see in this space is investors are going to move to not just focusing on equities, but really a multi-asset capability. So fixed income, other asset classes kind of rolled into their index in investing repertoire is a big area. FTSE Russell is making a big investment in that space. We just announced the acquisition of Citi's fixed income business yield book. So expect a lot of great things from us there.
There you go, and stay tuned to the CME Group, see how that product trades. And of course, you can head on over to FTSE Russell, FTSE Russell, 2 S's, 2 L's.com to learn more. Maybe follow them on Twitter at FTSE Russell. No, you can get your by the minute, by the second updates over there. Mr. Nick, before we go, you mentioned keeping the reports live. What else are you and your team working on over there at QuickStrike these days, sir?
Well, we got a few things in the hopper. Some of the more interesting ones is like a global product browser, so you'll be able to find everything that trades very easily on the CME and in an intuitive fashion, and then also get access to what expirations are available for those individual contracts. Maybe even chart those products that you don't know very much about in an easy fashion. And then probably coming down the pike in a couple of weeks is a lot of the block activity has increased a great deal on the CME outside of the energy market. So there's going to be some tools to make it available and make it easy for you to go out there and see the block activity across the different asset classes and dive into specific products without having to work too hard.
There you go. Check it out over there at QuickStrike. You can kick the tires, cmegroup.com/TWIFO, and then click on the links from there and play around if you want to get access to the full suite of products, all the cool tools. And on behalf of Nick and his team, and of course Ron and his team over there at FTSE Russell, and our friends over there at CME Group, and of course myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, sending in such great questions and comments. Keep them coming, and we'll see you next week for more of This Week in Futures Options.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.